All right, so you ready to dig into this Kinder Morgan earnings call?
Absolutely. Let's break it down.
They're really bullish on natural gas, and, we're talking about the future of energy infrastructure here.
Yeah. And it's not just about the pipelines. It's like they're making a bet on how we're going to power our lives moving forward.
Yeah, and what's interesting is they're projecting a massive jump in demand for natural gas over the next 5 years.
And they're putting their money where their mouth is, too, which I always like to see,
That's
right?
sugar.
They're bumping up their annual expansion spending to at least $2 billion.
On top of what they've already got.
Yeah, on top of their current backlog, which is no small potatoes.
Right. That's a strong signal. They see a big future for natural gas, even with all the talk about renewables.
And, there are a few things driving this confidence. One is the whole LNG export market, which is just exploding right now.
LNG, that's liquefied natural gas, right? For those who don't speak energy.
Exactly, and it's how we ship natural gas overseas.
Yeah.
So that's a huge factor. But then you've got the good old-fashioned power plants, which are still the backbone of our energy grid.
Keeping the lights on.
Exactly. And they're relying more and more on natural gas, plus all those data centers popping up.
Oh, yeah, true. Data centers are energy hogs, right?
Totally. And with AI and everything else, they're going to need even more natural gas to keep up.
So it's not just about keeping the lights on, it's about powering all this amazing tech, too.
Exactly. And then there's the population growth, especially down south.
More people, more energy, more demand.
Exactly. And this is where their strategy starts to sound a little bit like, what's that song, One Thing Leads to Another by The Fix?
I remember that one. Okay, I see where you're going with this.
New LNG facilities need pipelines to get the gas to them.
Right. Makes sense.
Then those pipelines, they need more upstream capacity to handle the flow.
It's a chain reaction.
Exactly.
Mm.
Like a domino effect. And
Right.
KMI is strategically positioning itself to capitalize on every single step.
So they're thinking about the big picture, the whole ecosystem.
Exactly. They're not just building a pipeline here and a storage facility there. They're thinking about how it all fits together.
That's fascinating. And they're not afraid to go big, are they? I mean, that $3 billion South System expansion they just announced, that's a huge statement.
It definitely is. But at the same time, they're not putting all their eggs in one basket.
So they're also going after some of those smaller, quicker turnaround projects.
Exactly. It's all about maintaining that steady stream of revenue, keeping the momentum going.
A balanced portfolio. Got it.
Exactly. And here's the kicker. They're saying that the returns on all these projects, both the big ones and the smaller ones, are consistent with what they've seen historically.
So no wild gambles, no risky bets.
Seems like they're being pretty measured in their approach to growth.
Okay, that's good to hear. But it's not all smooth sailing, though, is it? I mean, what about the legal challenges they've been facing, especially from environmental groups?
Yeah, that's the other side of the coin, isn't it?
Mm.
And they did run into another snag recently with their Cumberland pipeline project.
So how are they dealing with this whole regulatory landscape? Because it seems like it's getting tougher and tougher to get these big projects approved.
Well, they acknowledge that legal challenges are basically par for the course now in this industry.
So what are they doing about it? Throwing in the towel?
Not a chance.
Yeah.
They're actually doubling down on their legal strategy.
Oh, really? So they're gearing up for a fight?
In a way,
Wow.
yeah. They're being incredibly thorough during the permitting process, making sure every I is dotted, every T is crossed.
Yeah.
They're building airtight cases for their projects.
Smart. Because those legal battles can get expensive.
Tell me about it.
Yeah.
And they can delay projects, which throws everything off track.
Right. So they're playing the long game here, being extra cautious.
It seems that way. And they even pointed to some recent court victories they've had, so they're feeling confident.
Well, that's good to hear. But I'm curious, with all these legal challenges becoming more common, is that changing how they choose projects in the first place?
Absolutely. They're definitely factoring that in now, weighing the potential benefits of a project against the likelihood and the cost of a legal battle.
So they're being more selective.
Yeah, definitely more strategic about where they focus their efforts.
Makes sense. Well, let's zoom in on one specific example that I think highlights how KMI is approaching things strategically. And that's the Agua Dulce hub down in Texas.
Ah, yes. Agua Dulce.
Mm-hmm.
Now, things get really interesting there.
Right. So tell me more. What's going on down there?
So they're investing heavily in expanding their Gulf Coast Express pipeline system, specifically to handle what they believe is going to be a massive influx of gas flowing into that hub.
Okay, so picture a ton of gas all heading to Agua Dulce. Isn't that risky? I mean, could that create a bottleneck, like a gas traffic jam?
That's the million-dollar question, isn't it?
Mm,
There's always a chance that all these new pipelines could flood the market, especially if there are any delays with those LNG export projects we talked about.
right.
And that could lead to some price volatility in the short term.
So it's a calculated risk on their part?
There's always some risk. But this is where KMI's broader strategy comes into play.
How so?
Remember, they're not just a pipeline company. They've got a big trading arm, too. They buy and sell gas.
Oh.
Sometimes they even play in the daily markets.
Right. Right. So they're thinking beyond just transporting the gas.
Exactly. They see this potential oversupply at Agua Dulce as an opportunity. Maybe they buy low when everyone else is panicking and then capitalize on price differences later on.
That's some savvy maneuvering.
Right. And it doesn't stop there. They're already looking into expanding their pipeline systems from Agua Dulce all the way up to Katy.
Wow. So they're really trying to stay ahead of the curve.
They're playing chess, not checkers, anticipating market trends and making sure they're positioned to profit from them.
Love it. But let's bring back down to earth for a second. All this expansion, all this strategic planning, how did it actually impact their bottom line this past quarter? This was an earnings call, after all.
Right. Well, their Q3 earnings were kind of a mixed bag, to be honest.
How so?
Revenue was actually down a bit compared to last year, which might seem strange considering all this talk about growth.
Yeah, that is a bit counterintuitive.
Right. But they did manage to cut costs, which led to a nice 7% increase in their gross margin.
So they're becoming more efficient, squeezing more profit out of every dollar.
Exactly. And if you look at their year-to-date performance, the picture's actually pretty rosy. Earnings per share are up 9% compared to last year.
Okay, so not too shabby.
Not at all.
Mm-hmm.
And their adjusted earnings per share, those climbed 5%.
So steady growth, even if it's not some massive leap.
Exactly. Steady as she goes. But, earlier you mentioned their commitment to maintaining a strong balance sheet.
Right, because they're making all these investments. Are they taking on too much debt? Can they keep this up without jeopardizing their financial stability?
Yeah, that's the big question. And they addressed it head-on during the call. They emphasized their commitment to fiscal discipline.
Music to investors' ears.
Right. And they pointed out that their current debt-to-EBITDA ratio is 4.1, and they expect to end the year at around 4, which is comfortably within their target range.
For those of us who don't have EBITDA memorized, what does that basically mean? Is that good?
Basically, it means they're not drowning in debt.
Mm-hmm.
They're not over-leveraging themselves to fuel this growth. They're being smart about it.
Okay, that's reassuring. Because you don't want to see a company growing too fast and then collapsing under its own weight.
Exactly. And they even highlighted that they can fund about $2.5 billion in growth capital expenditures annually just from their existing cash flow.
Wow, so they're not hurting for cash.
Not at all. Plus, they've got additional capacity on their balance sheet to fund even bigger projects if the right opportunity comes along.
So they're thinking big, but they're also being financially responsible.
Exactly. But this brings up an interesting point.
What's that?
We've talked a lot about KMI's current strategy and their bullish outlook on natural gas.
Right, they're all in.
But it makes you wonder, how does a company so heavily invested in fossil fuels adapt to a future that's potentially less reliant on them?
It's the elephant in the room, right?
Exactly.
I mean, the world is moving, however slowly, towards cleaner energy sources. So where does that leave a company like KMI?
That's the billion-dollar question, and it's something we'll have to unpack further as we continue this deep dive.
All right, so stay tuned, folks, because we're just getting started.
It's a question a lot of people are asking.
Yeah.
And, it's not an easy one to answer. Right now, they're seeing a ton of opportunity in natural gas.
Yeah, they're definitely riding that wave.
But as the world shifts to cleaner energy, their ability to adapt and evolve, that's going to be key.
For sure. It's like they're walking this tightrope, right? Balancing their current success with the need to prepare for a very different future.
Absolutely. And it's not just about adapting to a new mix of energy sources either. There's this whole push for decarbonization.
Right, decarbonization, getting those emissions down.
Exactly. And that raises a whole other set of questions.
Like, could a company like KMI, with its massive network of natural gas pipelines, could they actually pivot and become a player in transporting hydrogen or captured carbon?
Now, that's the billion-dollar question.
Yeah.
And honestly, I don't have a crystal ball,
Right?
but it's something we'll definitely be keeping a close eye on. But for now, let's get back to their current strategy and that whole domino effect we were talking about.
Okay, so we've got LNG exports, power plants, all driving demand for natural gas. What else?
Oh, there's another piece of the puzzle that's becoming more and more important, and that's storage.
Storage. You mean like those massive underground facilities?
Exactly. Those things are huge. And as we move towards a grid that's powered by more intermittent renewables like solar and wind,
Which we are.
which we are,
Yeah.
well, natural gas storage becomes even more crucial.
How so?
Think about it. The sun isn't always shining, the wind isn't always blowing right. So you need something to provide that flexibility, that reliability to keep the lights on when those renewable sources aren't cutting it.
Ah, I see. So natural gas becomes like a backup, a bridge fuel.
Exactly. And KMI, they see that need. In fact, they just locked in a 3-year storage contract at a record high rate.
Wow, so those storage facilities are in high demand.
You bet. It's a smart move on their part.
Yeah.
They're capitalizing on both the continued use of natural gas and the growth of renewables.
They're hedging their bets. I like it. But let's bring it back to those specific projects again. We talked about the Gulf Coast Express expansion and what they're doing at Agua Dulce. How do those fit into this broader strategy of staying ahead of the curve?
Those projects are actually perfect examples of that strategy in action. They're anticipating future needs and making moves today to be ready.
So give me an example.
We'll take the Gulf Coast Express expansion. It's about more than just moving gas from point A to point B.
Okay.
It's about making sure they have the capacity to handle the massive increase in production that's coming as new gas fields come online.
They're laying the groundwork.
Exactly. Building the highways before the traffic jams start.
I like that analogy.
And Agua Dulce is another great example. By expanding their presence there, they're not just following the current, they're betting on Agua Dulce becoming a major energy hub.
So they're buying up prime real estate, essentially.
Exactly. Strategic investments in key locations to make sure they're at the center of it all.
Smart. But with all this talk about expansion and strategy, it's easy to lose sight of the bigger picture.
Right.
How does KMI's heavy focus on natural gas, a fossil fuel, line up with this global push for decarbonization and cleaner energy?
That is the million-dollar question. And it's one that's going to become more and more pressing as we move forward.
It's a bit of a contradiction, isn't it?
It is. And it'll be interesting to see how KMI addresses that in the long run.
It's a tough one to reconcile, right? Investing in natural gas while the world's talking about moving away from fossil fuels.
Yeah, it's a balancing act for sure. And it's something they're going to have to address head on sooner rather than later.
Did they offer any hints about this in the earnings call? Like, what's their long-term vision beyond this big bet on natural gas?
They didn't really lay out a detailed roadmap for the energy transition or anything.
Right.
But they did make a point of emphasizing their commitment to adapting to the market.
Yeah.
Whatever that looks like down the road.
Right.
They kept highlighting their experience and expertise in managing and transporting energy.
So they're implying they could use those skills for other stuff too. Like if hydrogen becomes the next big thing.
Exactly. They're saying, hey, we're flexible, we can evolve, which is key in an industry like this.
Totally, because who knows what the energy landscape is going to look like in 10, 20 years.
Nobody does.
Yeah.
It could be completely different.
Right. So they're not ruling anything out.
It seems that way. They're at least acknowledging that things are changing.
Well, that's something.
It is. It shows they're not completely tone deaf to what's happening in the world.
All right, so they're playing their cards close to the chest for now. But it sounds like they're at least thinking about the future.
Yeah, they're in a tricky spot. It's like they're trying to balance these short-term opportunities in natural gas with the long-term need to find their place in a more sustainable energy future.
It'll be fascinating to see how they navigate all this.
Absolutely. This is definitely a company to watch in the coming years.
All right, folks, that's the rundown on Kinder Morgan, what we learned today.
Well, I think the big takeaway here is that KMI is at a crossroads.
Totally.
Yeah.
On the one hand, they're riding high on natural gas. But on the other hand, they know that landscape is shifting.
And how they handle that transition. How they reconcile their current success with the need for a greener future. That's the billion-dollar question.
For sure. Well said. All right, everyone. Thanks for joining us for this deep dive into Kinder Morgan's world. It's a complex and evolving story, and we'll be here to break it all down for you every step of the way.
Always a pleasure chatting with you.
Same here. Until next time, folks, keep digging and stay informed.